Hey guys, it's Will here. Going to go through the markets again and the sectors and the stocks as usual. And I'll go through some of the ETFs that I think are doing well. And so let's get into it. On here on this TC2000 I got this tab markets here. And I mentioned that NASDAQ was looking good, but of course it's very high and extended. But if you look at this chart, we're in an uptrend with the moving averages kind of aligned here. 8 EMA, 34, 50, simple moving average, 200. And we're above this green volatility stop. We're a little bit extended, obviously not, quite a bit actually above the 8 EMA, but still in an uptrend. You've got some wicks here and a big down day there, but a bit of a recovery. So we'll see what happens, but downslope on the MACD, price percent oscillator. And, quite a bit up off the zero line here. So it's close to the similar high here. If you look up down here on the MACD, we've hit this point. This here was also the high. Doesn't mean it can't go higher, but those are the highs of the MACD price percent oscillator in the past. But so if you're in there, it's still looking good, but it is kind of extended. The S&P, similar situation, still in an uptrend, looking good that way. Dow Jones has been breaking out a little bit, just barely, of this. Not really, I guess. It's right at the point of the trend line that's kind of got shown here. But the 50 is above the 200 and you're above the 50. So as you start to break through here, so there could be like a sector or an expansion of the breadth of the market or a rotation potentially if people take their profits in the tech and move into this, or just a broadening of the markets. IWM also broke out recently. So these are all looking really good. Just especially the tech is a little bit extended, so we'll see what happens with that. But so from there I go down into sector ETFs, and one of the ones that really has done well is esports. You can see that on Friday it went up 5.5%, which is huge. So I drew these horizontal lines kind of to show the higher lows that are, you keep getting higher lows. I didn't do them over here, but support at the 200 and then continually rising. So if you draw like a line at the low point here, that could be just below there could be your stop. If you buy in after it pulls back and then goes back up, that's an actual physical price point low support. Cars, because of Tesla and stuff like that. So one of the nice things with TC2000, I've mentioned it a few times, is the component watch list. So you can open up the component watch list and then you can see all the stocks within that. So if I go to Tesla, you see how much it's really broken out here. And so in Ford and GM are going to be using the Tesla superchargers. So that kind of gave them a boost as well. If we sort by 30-day performance, most of the stuff is the tech. So FANG continues to do really well. Bit of a pullback here, big bearish engulfing candle. So we'll see what happens. And then these wicks here. So that could break there. But, it's been unbelievably strong since January, basically November, January. The semiconductors with NVIDIA has done really well. I kind of don't like when they do these really high, steep jumps and then a flat spot. So yeah, it needs a bit of time to consolidate and even pull back a bit, but it's strong. ARC is starting to come alive. The 50's above the 200 now. And you can see how we had this long period. So now we're flattening and now we're starting to go up again. So these are, the ARC funds, the Q, the ARC G, ARC W. They're all kind of doing the same thing where they're breaking up above the 200 and the 50 days above the 200. Cloud is another one. It kind of hit a point where it hit some resistance from previous points here. You can see how many times it touched here and here. So we're right at that point, but some kind of rest or consolidation, and it could be taken off quite nicely again. But you have to look at other sectors and other like cyclicals and all these things to see what's going to happen, like with banks and energy and all that stuff, because the tech has really taken off quite a bit. So that covers the tech stuff. I put a few, so in TC2000, I was going to mention, if you want to get a free trial of this or $25 off a subscription, check out the link in the description below the video. I've got the gold plan and US real-time data, but one of the features is this flagged, you can flag a stock or ETF or whatever. There's a couple ways to do it. One is up here, there's this flagged icon on the stock here. But if you go over here in the list of the sectors or whatever your watch list is, there's a flag. And then what you can do is you can sort by flagged, or what I do, I have a column, a tab. So if you go over here where it says there's like a plus in a new, you can click on this and add a watch list, and then it'll give you the choice. If you click here, all your personal watch lists or the ones that are built in. But there's this thing called flagged items. So I already have that, so I'm just going to close that. But in the flag tab now, it'll have all the ones that are flagged. So if you want to have like a watch of something you're watching, and you can have different watch lists for different scenarios, but just a simple way is just to flag things. So part of your process could be identifying stuff you're interested in, so you can just quickly flag it. And then you can go back and maybe look at them in more detail. So these ones, the reason I flag these is mostly because they're starting to move in an uptrend. Like jets is the travel. I generally don't like this industry, but you saw how we broke this downtrend here with higher lows established. And there's a lot of consolidation with the moving averages, so we're breaking out now. EWZ is Brazil, same sort of thing. Broke a big downtrend, and now we're breaking through. COPX, the reason I picked COPX is not as good as those other ones, but I'm wondering about the commodities. Obviously I was worried with the recession risks, but just the fact that we have this downtrend, we kind of broke it a little bit here, but and it's supported like a double bottom here. So just something to keep an eye on. ILF was similar to the Brazil. This is Latin America, so it kind of broke a fairly strong horizontal resistance. XLP, I just took a look at. So yeah, a couple of these are more about like, is this a support entry point? It's not like it's moving up in a big strong uptrend, but we got some support, and is it going to, like we can see MACD potentially curling here. So this isn't great, but there's been an oscillating scenario here. You can see how it went down, up, down, up, down. So if there's support there, it's just something I flagged. I can look at it in more detail and decide if I want to get into it. Emerging markets started to look good, above the 50. You just have to break through this little horizontal resistance. Cane has been an unbelievable run, which generally is a little nerve-wracking. It's kind of way up high. The 50 separated. So we could have, it's always risky to buy right after a big run. When it pulls back and you start to see a little bit of life again, you're tempted to jump in. But the MACD did come back down to almost zero. I mean, the price percent oscillator momentum. So just wanted to keep an eye on that. And then the retail online started breaking out. So it broke this downtrend here, and it popped. But there was a huge down day, well, not a huge, but 4% bearish engulfing right there. But it's starting to break through. some of this pullback here. So that's just an interesting feature of TC2000 is the flagged. I might also go to this other tab I have, which is called Naked. There's no moving averages or volatility stops or anything. I still have the indicators down here, but for the most part, I'm just looking at the price. And it kind of gives you a nice clean sense if you have higher lows. And so if we go to sectors again, I'll sort by a 30-day. So other than the tech that I mentioned, if you look at, there's, obviously Japan has done really well. These ones make me nervous when they get up, like, see how the price percent oscillator is right at the peak here. It's pretty high up, but almost 2 on the price percent. Another one's 1.6. It kind of peaked here. Now we're at 2.26. Not to say, couldn't keep going up, but that was a good run. Uranium had a bit of a, you can see it's starting to rise here. But yeah, it's a little bit ugly chart, just a consolidative period in a sense here. Biotech was starting to interest me a little bit. There's a bit of an uptrend here. If I draw, I don't know if I drew that already. Yeah, I did. So, hasn't been a great moving ETF, but there is a bit of an uptrend here. If you want to click on this component watch list and go to like 30-day or something like that, ImGen or whatever, Immunogen, that's just, I don't like when it does this type of stuff, but like these huge jumps like that. But Twist, we're just starting to see an increase here after a break of this downtrend. So a lot of times I'll draw a line like that. And if I'm seeing higher lows, which are slowly it's not super strong, but there was a low here, almost the same point there. And then just kind of a fairly boring uptrend with small little candles. But if you want to look at individual stocks, like this one looks pretty good. You had this long consolidation period. Once it broke through there, now you've got this uptrend. So you can draw lines if you want, like an uptrend, and just stay as long as it's in the uptrend like that. Or you can use horizontal lines, because sometimes the trend flattens out, and so you're going to break that trend, but you're still, in an uptrend. So if you draw higher lows here, and you drew one, the only trick is if you move it up too quick. If you say I went and put a line here, when I broke through that, I'd probably get out, which is fine, because it did stay pretty flat. But once you have this low here, and then you jump up and you have another low up here, that could be your entry point. Sometimes you can draw a little, when you start to see it sort of pulling back, and then it gets to a trend, you draw that trend, and then it stays on that trend. So sometimes it gets ahead of the trend and then pulls back. So that's a good entry point once you're back on that trend. So it was kind of going flat for a bit after it spikes, and that's when you could potentially stay in on a trend like that. So that's kind of a nice chart sometimes, just to see the the stuff without the moving averages and get all confused with multiple too many lines on the chart. Housing was another one that I was surprised with interest rates going up and stuff, but that's another reason to just focus on the charts. So you see how I drew this line here? We came back and pulled. So if you had a line, like if you're drawing some sort of trend line, you would break through that. But if you did it more about, like, you draw a line on a pullback, and as long as it doesn't break that, you could stay in. So that's why using, like you see here how it went up steeper and then it's flattened out, but the lows, the lows kept going up. So if you drew a low here underneath here and it broke that, you'd probably get out. And then you would wait for like a pullback, maybe get back in when you start to see it break through up here. And then you would use this recent low as your stop, or just below that would be your stop. Okay, I think that's all I'm going to talk about today. I just wanted to mention one other thing, that the crypto, it's not on here because it's the weekend. These are ETFs and stocks, but if you want to go to like crypto, I use TradingView. So I also have a link below if you want to pay for like a little more service, get more alerts and more watch lists. I've signed up for TradingView as well, like a little bit paid program, so you can get a benefit from signing up with my link below. But with the SEC suing Coinbase and Binance, there's been quite a bit of a pullback on the weekend. Just today, Saturday, like Binance is down, but BNB 8.4%. This is a Renko chart I'm just looking at right now on my TradingView. I'm kind of investigating that a little bit, but Renko are like blocks, which kind of eliminate time for the most part. They just go up whenever the price gets above a certain block size, and so it's an interesting approach. But Bitcoin's down 2.84, so you can see from the chart that we're in an uptrend here with a higher low here, but we're pulling back. So you want to see it start to head up again before you would enter as a long. But there's also, it's actually in a downtrend in a sense, because you have you basically have lower highs. You did get a bit of a break there, but now you have continually lower highs. It's a little bit of a weird thing, because this is where you start to get a transition. You could have got it. It could have started to go, because you started getting higher lows and higher highs. You could have broken out. Then it didn't happen. So it's kind of, this could be considered a rally within this bigger downtrend. If I take the line from here, if I were to extend it, it's kind of nicely fits. The actual beautiful thing is this line that hits these high points also coincided with a low at about 30,000 from this low over here. So when you get these coincident lines, that's a strong resistance point. So the question is how far is it going to go down? In crypto, when you're screwing with the exchanges, you're going to have a lot of money coming off and harder to buy crypto. So it could be a pretty bad scenario, and if he sues anybody else. But so right now with the red blocks, you're in this downtrend. If you look, I'm going to go back to TC2000. There's an inverse ETF called BIDI. I'm just going to go back to the candles here. But so you can see that we've been heading up. We have higher lows. There's some red volatility stuff just when it pulled back here with a bearish engulfing, but the momentum's heading up. So now, and we're above the 50. So this could jump in terms of the BIDI, which is the inverse. So on Monday, you could consider, but it'll probably be up a lot in the pre-market because it's already down. And Ethereum will be down quite a bit over the weekend, unless it recovers by tomorrow. It's on Monday when it opens the Ethereum ETFs. So if we go to like say GBDC, we're in a downtrend, like I mentioned, and ETH is the other one. So these are basically downtrends. So they're not, and we actually broke this, and now it'll be even worse, but we broke this support here. So that's kind of an entry point when you break a downtrend. When you break a support, that's another entry point if you're not in it already. Red volatility stops. It's starting to curl down, and back to Bitcoin again, which is GBDC. It'll probably break this one on Monday. In Canada, there is BTCC, and of course we're not going to see today's. Even though there's green volatility stops here, you can see the downtrend that we're in. So that's why I always say you want to see higher lows and higher highs, because that signals an uptrend, whereas this is lower highs and lower lows. So, okay, so I'm going to stop for today. Don't forget to check the link in the description below for a free trial or $25 off your subscription for TC2000. And hope you guys are enjoying it if you've picked it up, because I've seen a lot of people have gotten this program, and hope you're enjoying it as much as I am. So we'll talk to you guys in the next video.